Nobody tells you this stuff when you're buying your first home here in South Florida. So they sit you down, they show you the mortgage payment, they run some numbers, everything is great, and you get to closing, everybody's excited. And then it happens. The bills, they start piling up. They start coming in from everywhere. And some of these are bigger than you thought. You've got certainly insurance, you've got HOA fees, you've got condo fees if you live in a building, which then has reserve fees. You also got maintenance on your house. You've got so many things that you didn't think about when you bought your home. So today we're going to tell you all about it. Here's the thing. Some of these bills, they don't just chip away at your budget. Some of these things can ultimately be deal killers. So it's better that you know more about this up front than before you get locked into that first home. Today I'm going to break down in this video all the hidden costs for those buyers here who are moving down to South Florida and buying for the first time. I don't want you guys to be caught off guard or have any big surprises when you get to the closing table and then when you start to enjoy your new home or your new condo. By the time this video is over, I hope you have a much better idea of what owning a home here in South Florida looks like. It's not just your mortgage payment. I'm Riley Smith and I run the Riley Smith Group, which is one of the largest real estate teams here in South Florida. I've been selling real estate down here for over 25 years and have helped thousands of people navigate these very, very exact challenges. So pay attention to this video. You're going to learn a lot, I guarantee you. So number one, and I think probably one of that is the biggest surprise for some people who are not familiar with how our tax situation is down here. Down in South Florida, we live off property taxes. It's how we make our money. It's how the government runs. But there's a lot going on there that people don't understand. Quite often when you're looking at purchasing a home, you can go online and you can see what the current owner is paying for property taxes. So you budget for that. You think, okay, a little more, a little less, but that's what it's going to be. What you don't realize if you're not from down here is that as soon as you purchase the home in the next year is going to be reassessed. And it depends on how long the old owner had been in that home as to whether or not that assessment stays close to the number you saw, or it could double, triple, or even quadruple. So there's a lot more to the property taxes than you need to know. First thing you need to know about property taxes, and I like to be conservative. When you're buying here in South Florida, Coconut Grove, Coral Gables, Pinecrest, Key Biscayne, it's all about the same. The best rule of thumb is to think of you're going to pay annually about 2% of your purchase price. Yes, annually 2% of the purchase price. Could be a little less, could be a little more, but that's a very safe number for you to budget. So just keep that in mind. Disregard completely what you see on the current tax rolls because that situation is dependent on how long the old owner has been there and whether or not they had their homestead in place. Homestead tax exemption, what is that? Let's talk about it. This is one of the most critical things you do when you get a home here in South Florida. Every March 31st, if you've bought a property the year before, you need to make sure you register with Dade County Appraiser's Office and let them know this is your homestead. What is your homestead? This is where you're going to live the majority of the time. You're telling South Florida, this is my home. There comes with all kinds of protections. So you're protected from lawsuits. You're protected from your taxes only going up 3% a year. Why is that a big deal? Well, in South Florida, we've seen some big booms and some big climbing, escalating values. So if you don't have homestead, every year they could raise your property taxes as much as they want. It all depends on what's happening around you. I've seen some go up even as much as 10%. So you got to lock in that 3% because it's super, super critical. And then there's this thing on the back end when you go to sell. If you're a single person, you get to deduct $250,000 of your profit from your taxes that you don't have to pay capital gains on. If you're married, that number doubles and goes to $500,000. Those are the two biggest benefits I see when it comes to what's happening with the property appraiser's office and homestead value down here in South Florida. Number two, now let's talk about the second biggest one that surprises people a lot, and that's insurance. Insurance all over the country comes in all different sizes, packages, and of course price tags. But here in South Florida, we have these little things called hurricanes, and that has really changed the game for insurance and totally set a whole different bar when it comes to the cost of insurance. This is something a lot of people don't think about before they get down here. When we're talking insurance here in South Florida, there's a couple different insurances. There's the general insurance of your home that most people are familiar with. That covers liability, fire, things breaking, theft, those kind of things in your home. That's not the big ticket item that we're really worried about. Down here, we have this thing called windstorm insurance. Of course, it is to protect the home from hurricanes. So if a hurricane comes and you lose your home, Windstorm will be able to give you the funds to rebuild it. It is a requirement by all lenders. So if you're getting a mortgage, you can't get away from it. This is the one that blows the budget. It can widely change depending on how your mitigation is set up. Whether you have impact windows and doors, what kind of roof do you have, how new the home is. These are all things insurance companies take into evaluation, and that is really what it comes down to, getting the number right here. This is something you have to shop around and check with a lot of different companies for because it really, really varies. And the third one is flood insurance. Flood insurance is not required in a lot of places, not required by a mortgage lender unless you're in a flood zone. So you got to be careful and make sure you check the flood zone. There's a website online. It's very easy to see, and that'll let you know if you have to add flood insurance on. But me personally, I believe if you don't live in a flood zone, you should still spend the money and have flood insurance. It's not very expensive, and if there is a flood or something happens in the house, you're covered. So when we're looking at setting the cost of insurance, there's a lot of different things to play in mind. There's the deductible that you're comfortable with. There's also the coverage that the bank is going to require. Now that coverage is based on the appraiser's report, which tells them what the appraiser thinks it's going to cost to rebuild the home to the level that it is currently. Now this is a number that's debatable. It moves back and forth. It's kind of a moving target. Some people like to spend a little more money and get extra there because we know things usually cost more in the real world than they do on paper. But those are the two things that we're thinking about: deductible and really what is the amount of money that it will cost the insurance company to rebuild the house to its current level. Those are things you need to think about. The last one, of course, is also how do you value your materials and your things that you own inside the house if everything, God forbid, was washed away. That is where you have your insurance on your property and stuff like that, not just on the home itself. So these are some of the things we think about, but mainly just remember deductible and how much is it going to cost to rebuild the house. Those are the two that are going to set your insurance. I think if we look at the history of homeowners insurance, it's really changed a lot in the last few years. Luckily, knock on wood, it's been a couple years since we've had a hurricane here in Miami, but certainly Florida has had a rash of hurricanes. The more hurricanes we have, the more the insurance companies get depleted. Naturally, the more they're passing that cost on to us. So if we look at how they've changed dramatically in the last 5 to 10 years, and it's changed the way insurance companies look at your home. They are way more worried about all the little things and making sure everything's right. A surprise sometimes people get is they'll buy a home, a year later the insurance company's going to come out, do an inspection and say, oh, wait a minute, your roof is not up to par. You need a brand new roof. So these are all things that we've got to think about while we're negotiating a home for a buyer and make sure that they're ready for these unexpected surprises. Number 3 are HOA fees. HOA fees are so common in some of the parts of South Florida where you have gated communities and other private communities. And it's always listed right on the MLS, but it is amazing how many buyers miss it. So if you live in a gated community or in some other community where the neighbors have all gotten together and decided they're going to share some costs, probably the biggest cost would be security. If you have security in your neighborhood, and let's say you have a guard gate or you have roving patrols, and they're going to go ahead and charge each person in the community a certain amount, depending on either the size of their house or the size of their lot. It varies all over the place. But generally, there's some big things like HOA fees cover security, they'll cover a gate, they'll cover electricity, they'll cover landscaping of the common areas. And then you get into other neighborhoods like Cocoa Plum and some of the areas out west that have much more common amenities. Some may have a pool, some may have a clubhouse. Of course, the bigger ones out as you go a little more north have golf courses and all of these things. So when you think about buying a house in a gated community, you want to make sure you check HOA fee. Make sure you know exactly how often you have to pay it. Sometimes people, they show it as monthly. Sometimes they show it as quarterly. It's a very big difference when you look at that number. But it's important to understand that that number also is a number that can always change. So when you're buying, you've got to be prepared for that because as life goes on, we all know everything generally goes up in life. Your HOA fee is definitely going to go up. I've never seen them go down. So just make sure you understand also what is not included. Most HOA fees, we're talking houses here, are not going to include things like your cable, your internet, your water. Those are things that you're going to have to pay for yourself. Though a little bit different when we get into the condo buildings, and we'll talk about that next. Number 4, and this is probably the hottest topic in South Florida real estate right now. Obviously, after the collapse of the building in Surfside, all condominiums are under scrutiny from so many different angles and different ways. So we want to talk about what are condo fees like and what you can expect when you're purchasing a condo. So first, let's talk about the difference between an HOA fee, which is mostly single-family home gated community or townhouse community, and a condo fee. The biggest primary difference is generally, not always, but most of the time, a condo fee's main expense is going to be covering the hurricane insurance for the entire building. You don't have to carry hurricane insurance as a private owner of a condo. The building is already going to have it for you. So God forbid the entire building gets hit by a hurricane and has messed up and needs work, the association will have proper insurance there. So that's the main driver, but of course, there's so many other things that it covers. Well, it covers, of course, amenities. We've got pools, we've got gyms, we've got spas. Some of the high-end ones, we've got dog walking services, and we've got hair grooming, cutting inside. We've got Pilates classes. We've got all these amenities that people are looking for, and they have to be paid for somehow. So, of course, those go into the condo fees. Once the Surfside collapse happened, it really changed the landscape of insuring condo buildings. All of a sudden, the insurance company and the mortgage companies were looking at these things so much more closely. There were so many hidden little problems with these small and even large condo associations. Remember, condo associations are generally managed by the people that live there. They have a board of directors that generally manages the condos. It's their job to make sure that you have the proper reserves, that you're doing the proper maintenance, your proper checks, and all of those things. But that has not always been the case here in South Florida. A lot of these condo associations have operated on very thin budgets with not a lot of reserves and really relied on keeping costs down so that the people that live there, a lot of them on fixed income, could afford to stay. Now, things have changed. The government has stepped in, Insurance companies stepped in, mortgage companies have stepped in. They've all put their 2 cents in there. And now we have to make sure, if you're purchasing a condo, we walk through with you everything about the association's finances. Are they collecting enough money? Do they have enough money in reserves? Are there any special assessments that have happened in the past or are they going to happen soon? Have they done their 40-year certification and do they have the money set aside for that? These are just some of the things we have to look at. It's gotten so complex buying a condo down here. But if you have the right team in place, the right realtor, the right insurance company, and the right mortgage broker, we can still get it done for you, and we do it every day. So one thing, if you're not used to condo living, that people always ask me is, what is a special assessment? Why do I pay it? How do I pay it? Where does it come from? This is a very, very common question we get. Special assessments are usually when the building is faced with a problem it did not anticipate, or when a building had not been properly setting aside reserves for maintenance. So you could have a special assessment because the roof needs fixed, the elevator doesn't work, or you have an older building that you just want to update the amenities. You want to make the hallways look nicer. You want to redo the pool deck. You want to add value there. So what happens is the board comes together, they vote on what projects they want to do, they send them out for bid. Once they get the pricing, they divide that price by however many units are in the community, I should say in the building, because we're talking condos, and that's what your assessment is going to be. Now, you can pay it all at once usually, but most of the time what they'll do is go to a bank and they'll get a loan, so you'll be able to add it to your monthly payment and pay it over time so that you don't have to absorb such a big chunk. But this number can be astronomical. So it is something that we have to look at very closely and try to anticipate if these things are coming anytime soon. And if you're in the middle of a negotiation, you want to make sure if the seller already knew about it that they're responsible for taking care of it, or that they're at least going to pay a piece of it, or at a bare minimum that they disclose it to you. So last, number 5, and this one is something that not everybody really thinks about. They get all wrapped up in the big numbers when they're getting ready to make a purchase and make sure they understand what's going to be their monthly responsibility from all of the big things: insurance, HOA or condo fees, mortgages. Those are the main things, and then the taxes come in. But there's so many hidden things in all of the little parts of living in a home here in South Florida, and we want to dive into those for you today. So when you're moving here from somewhere else, one of the things that you don't really understand is, what does the annual maintenance look like on a home? What kind of services am I going to need? So these are things we like to point out. It's a wide variety of things depending on where you live. It's very different if you live on the water than if you live more in the middle of a community. So let's just talk about some that are very common, and then I'll tell you about some that people forget about. The very common one is, we live in South Florida. Everybody's got a yard if you buy a house, and you've got to take care of your yard. So you're going to have lawn maintenance for sure. Down here, most people are doing it once a week. It rains a lot in the summer. Everything grows like weeds and crazy. You probably can get away with twice a month, but that's about it. So you've got lawn care. Every other house, I think, down here has a pool, so you've certainly got to have your pool maintenance guy. Nobody wants to do that themselves, so they're probably coming once a week. Those are two of the more maintenance things that happen on a regular basis, but we also have these little things down here called pesticides. There are bugs everywhere. We've got termites, we've got roaches, we got ants. So you're probably going to have someone come in and take care of your insects problem. Make sure you're budgeting some money to tent the house every few years to kill the termites. These are things that not everybody who's not familiar with South Florida would know as part of their regular weekly, monthly home maintenance costs. Then we go into repairs. Every home is going to have some problems depending on where you are. If you're near the water, they're bigger problems. If you're more inland, they're not as big, but you're always going to run into problems. The sun is beating down on everything. The wood is going to rot from the rain. So you're going to have wood rot. You're going to have some roof damage. Surely you're going to have other things happening in the house that you're going to have to budget for. Then let's talk about other costs that are not necessarily maintenance. You've got the carrying costs that happen inside the house. You've got your utilities, of course. Everyone down here now can't live without high-speed internet and cable of some kind. You've got to have your electricity bill, number one thing. Probably got HVAC in your house that has to be, the filters are changed regularly. You need to service the HVACs. And depending on the age, you maybe need to budget replacing that. There's some things that you can do to make these costs a little better. If you have a new roof, if you have impact windows and doors, if you have solar panels, these are all things that can help mitigate some of these monthly costs, but they are things that will add up, and you should be thinking about them when you're purchasing a home. They're not something that shows up on your closing statement that your mortgage broker is going to tell you you have to pay, but there is no getting away from them. We cannot live without these basic things anymore. A big part of understanding this entire package that we're talking about right now, which is the hidden costs of home ownership, the continued maintenance, and potentially what you might have to do to the house, is making sure that you have a very, very good and strong general inspection before you're finished with your contract while you're still in your due diligence period. This way, they're going to lay out for you every little thing. These things I'm talking, they're 60, 70 pages today that take a picture of everything. So whether or not you negotiate a credit or not, but if you decide you want to move forward buying the house, having this in your hands is a great place to start to make sure you can get your house up to the level you want it, and you can be preparing for other things that may come down the road. They'll tell you the general life of all of your appliances. They'll tell you how much time you have left on your roof. These are all things that will help you understand how you need to budget for later on and other things that you can't anticipate today. So here's what I want you to walk away with today. The mortgage is just the starting point when it comes to home ownership costs. So what we want when we're helping our buyers is make sure they understand the whole package. We don't want them to close and be stressed 6 months later. So we want to make sure that they understand all the fees they're going to be paying. So let's just talk about it one more time. We've got insurance, we've got taxes, we've got maintenance on the homes, we've got all kinds of utility bills, we've got future maintenance that you might need to save for. And then maybe you have flood insurance if you're going to add that on there. There's so many things. Don't forget the HOA or the condos that you need to make sure you take your time, properly get everything put down on paper so that you can see what the real monthly cost is of carrying a home or a condo here in South Florida, because it's not what's on the closing statement. So if you found this helpful, please, please, please drop me a comment below. I read every single one of them. And if you're getting serious about buying down here in South Florida, we would love to set up a free consultation with you. We call it a buyer's appointment. We sit down and we walk you through everything we just talked about and so many other things. This is what we live for here at RSG. We love helping buyers navigate all the things that have to do with home ownership in South Florida. So please subscribe if you want more videos like this one. We try to do one of these every week. And if you know anybody that could use this and be helpful for them in any way, please send it to them. And I'll see you on the next one.